David, it's great to have you on the show today. As I mentioned earlier, the market is up again today, extending the gains we've seen recently. Your thoughts on the rally we're seeing these days?
Thank you very much, Wole. Nice to be with you. Just as stated, the equities market in Nigeria is still upbeat. The rally has continued with undiminished intensity. And so it's a positive development coming into the fourth quarter of the year. Apparently, it looks like we are deviating from the seasonal trend, which we have witnessed several years in the past. And so it looks like this is going to be a different year for the equities market in Nigeria. Well, there are so many factors that have actually facilitated this rally we are witnessing in the market. All macroeconomic indicators in Nigeria are positive. And when the economy is standing on a positive pedestal, the equities market is the primary beneficiary. And again, we are seeing a fixed income market where the yields are fast declining. These are all positive factors that are capable of driving the equities market. So that is what we are witnessing. Also, within the system itself, we have a market-making operation which has taken off. And so it's eliciting a high level of confidence in investors. I read just recently that at the beginning of the year, we had a market dominated by over 80% by foreign investors. But now that has reduced to about 70%. So which means that local investors' confidence has risen to the point that they are now supportive of the stability we have in the equities market.
To some extent, yes, definitely I would agree that we're seeing a lot more, at least some more local participation in the market. Today it's important to note that we did see lower volumes. We saw the market moving higher on lower volumes. But for me, the big thing today is the fact that we continue to see the likes of Nestle, Unilever, stocks that some people are already saying are very, very richly priced, continuing to lead the way. Your thoughts on this dynamic? Because to some extent, we may be seeing a bubble that is now segmented to the multinational companies.
Yes, Wale, I think that is the challenge right now, that perhaps some little bubbles may already be creeping into some sectors of the market. But again, if you view it against the backdrop of the fact that a lot of strategic investors are actually interpreting the signals emanating from the Nigerian macroeconomy, which has become very, very positive, and that this may drive increase in the capacity of the middle income earners in the economy to consume much more in future. And so a lot of strategic investors, both foreign and domestic, are leveraging on that fact and positioning in consumer goods stocks. They are taking position now. And we also understand from market hearsay that some of these consumer manufacturers have actually put a large war chest to enhance their production capacity in Nigeria. And so if the companies are doing that, consumers are also, in terms of investors, are also making that observation and interpreting. And so it's not surprising, therefore, that the consumer sector of the market is actually becoming upbeat to the point that perhaps bubble is creeping into that sector.
But where do you see value? Where do you see value in this market? A lot of people talk a bit about the banks. Is that where you think investors should be focusing on? Or do you think we should start looking towards the insurance companies? I did have an interview with a fund manager last week, and he made a very strong case for insurance companies.
Yes, with the rescue of the banking sector, now that sector has put the financial crisis behind it, I can see a lot of value in that sector. Indeed, the sector still has intrinsic value. If you look at the improving state of the fundamentals of banking companies right now, and also looking at the insurance sector, you may recollect that sector was severely damaged as a result of its exposure to assets in the equities market. But it does appear that that sector is also fast recovering. If you look at the profits that are emanating from the insurance companies, we can only say that it's a matter of time for investors to realize the positive indications that are emanating from that industry, and consequently lashing. But we're already seeing pointers to that effect. If you see what is happening to ICO now, you will know that investors are reacting positively to the improving state of the insurance sector. The same with NEM and a couple of other insurance companies. They are coming off very well.
You just mentioned a few insurance companies. Are there any other companies you think that investors should be putting their money in right now? What are your best ideas going into the rest of this quarter?
I still see some value in the agricultural sector of the market, because if you look at the agricultural value chain with which the entire economy is trying to leverage on to boost the general state of the economy, create more wealth and generate productive employment, I believe that that sector has untapped potentials which investors can leverage on.
All right. Thank you so much, David. We look forward to speaking to you again sometime. So David Adonri, he is the General Manager at Lambeth Trust Investment, joining us from the Nigerian Stock Exchange.